This article comes from Investors Business Daily. Ferrari stock races past Tesla for the top pick in the U.S. Autos, analyst says. Ferrari has replaced Tesla as the top pick in the U.S. auto space, according to a top financial service firm. Morgan Stanley analyst Adam Jonas wrote Monday, the Italian-based luxury sports car manufacturer has now replaced Tesla as the top pick in the U.S. auto stock based on a relatively bearish view on auto fundamentals. Jonas wrote, Ferrari has the longest order backlog and the greatest earnings visibility, along with the highest pricing power of any company we cover. Ferrari ain't cheap, but that's the price for security. We see Ferrari as the most defensive name in our coverage that avoids much of the EV hype and EV risk. We believe Race Ferrari is the best positioned company in our coverage in a highly uncertain macroeconomic and geopolitical tape. Jonas added Ferrari stock now leads the field based on its long-term EV opportunities, its predictable business model, and near unmatched brand and market moat. Wow, Jonas is very high on Ferrari. So we're going to quickly go to the Tesla chart, and I'm just going to pull up the monthly chart, and we can see that over the last 2 years the Tesla stock price has made it head and shoulders and did decline 75%, hit a daily buy zone at 105 and is pulling back, and in the process of testing the resistance level at 220. So let's go to Race, and this is the monthly chart of Race, and you can see that it is testing its all-time highs. Unlike Tesla, which is still roughly 50% from getting, or excuse me, 100% from getting back to its all-time highs. Now the reason for the decline was the huge move up during the pandemic lows of 2020, and they also split, and you had the retail investors just piling in to the point where it was just really overvalued. And when interest rates started to get spike in interest rate hikes, capital debt cost more money, stock market overall was overvalued, and Tesla fell. At one point, Tesla was worth more than several of the top car manufacturers in the world combined. So that's why it did decline 75%. Okay, let's go to Race. Well, we can say that Race is back at its all-time high, but it is also in a monthly seller's zone. We'll say 270. If price can break and breach this monthly seller zone, this right here would be a nice monthly buy zone. We'll shade that in black, as this is not a zone yet. Let's just go down to the weekly chart. Now you can see we did have a nice gap out of this level here, strengthening the case for this to be a zone where if price was to pull back, you should get a bounce. Now the analyst had a 280, 310 target from 280. So the analyst moved his price target up from 280 to 310. And 310 would be right there. So quite a bit to go. However, right now price is in a monthly seller zone, so you don't want to go long. You rather wait until price breaches the zone, if it does, and then you wait for a pullback, and that's when you go long. So two scenarios can happen. Which one's going to play out? I don't know at the moment. I would take a short if on the lower time frame I saw some type of reversal pattern, and I would go long down at 220 if I saw a reversal pattern to take it long. Let's just go down to the 4-hour chart just to see if we see anything. So for me, I would want to see, to go short, that is, this level taken out first. Where price would then potentially pull back to somewhere in the scenario a smaller time frame seller zone to take it short. That would be the only way I would take it short. Price has to start breaking down. Confirmation would be if your moving averages start pointing down as well. But because we are in a monthly zone, I would want to see some type of reversal pattern on the daily chart. Thanks for watching. Subscribe. Please like the video.